Hello friends, this is Vijay Bhambwani here, and I hope you're trading the markets well and the markets are treating you kindly. In this video, I want to update you about what is happening in Bullion. Because the prices have come down, and I'm sure a lot of my viewers are curious, they are anxious to know what's happening and what can be expected. Now, in the last few videos, I have been telling you that crude oil is unlikely to go to $100 a barrel, and I've been receiving a lot of very interesting, some even hostile messages on my personal inbox and direct messages, etc., which leads me to believe that a whole lot of people don't concur with my view. But before you go and say, hey, wait a minute, has this guy gone off his rocker? Why is he talking about crude? Let me show you something. I'm talking about bullion with a view on crude oil. Let me show you something. These are two CD cases. If you line them one after the other in a line, and if one of them was to topple like this, it'll topple the other. All right? And if you line a whole line of them, all you need to do is just tap the first one and it will keep on toppling all the others in a row. I have just explained to you the domino theory of financial markets. This is exactly how one asset class brings down the other asset classes. Now, why does this happen? There was a whole lot of people expecting crude oil to go up. Obviously, they bought crude oil, they paid a lot of mark-to-market, span margins and concentration margins and ELM, extreme loss margins to the exchanges, and built up long positions. Now, as a corollary of that trade, what really happens is if you're betting that crude oil is going to go up, you're saying inflation is going to go up, and therefore gold and silver will also go up. So you go out there and buy gold and silver because this is a part of the logic. And suddenly crude starts to dovetail. It starts to fall, and fall how? Sharply. It's been falling over 2% on many a trading session. It's crossed declines of even 3% on 2 trading sessions. So the guys who were kind of skeptical, who were sending me a few unfriendly messages, this is not an I told you so, but I'm just telling you the domino effect has just hit crude oil and by extension gold. Now there's a mark-to-market concept. If you've bought something and the value falls, the exchange through your broker will want you to pay mark-to-market, the notional loss. If you do not pay this mark-to-market notional loss, the exchange through the broker is entitled to square up your transaction and sell off your long positions. All right? And the initial margins, the span margin, might be paid by way of collateral, which is shares, bonds, mutual funds, etc. But the mark-to-market margin are specifically and strictly to be paid in cash. By cash, I mean check, actual money. You can't give collateral. You can have 5 crore rupees of bonds or fixed deposits or approved mutual funds and shares lying with your broker, but if there is 5 rupees deficit in your mark-to-market account, he will square up your transaction. That is the securities law. All right. Now, a whole lot of long positions in crude oil have got squared up by the brokers for want of mark-to-market margin. And what really has happened is, now that these margin calls have come in, margin call means the broker calls you up and tells you, I want margin. All right. Now that these margin calls have kicked in panic, traders are dumping other assets. If you're in the commodity space, you got bumped off your long positions in crude oil for lack of margin. You will try to safeguard yourself by selling out whatever other long positions that you've created. This is why, like dominoes, like the domino effect, crude oil fell and it toppled gold. Financial shortages often compel people to square up their transactions at a loss. And when they get upset, they tend to go on the other extreme of risk aversion and sell everything else that they have also. Plus, there are also reports of the US resorting to tapering. Tapering would mean reducing the amount of stimulus or free money or helicopter money that they have been giving. Now, just the feeling that tapering might just come, this has set off some amount of panic. Which is why, my viewers, I have been telling you to learn about bond markets, yields, fixed income, because the really, really rich, ultra high net worth and high net worth investors know that it is the bond market that runs the equity market, not the other way around. The tail does not wag the dog, it is the dog that wags the tail. And if the cost of money is going to go up, the days of easy money might just be pushed back. Which is why I recommended to you a video titled Attention Bank Nifty Traders. I explained to you why the cost of money might just go up. So what are the levels that you need to watch for gold and silver, and what do we expect from here? First of all, in spite of the fact that gold and silver have really come down, I'm still bullish for the long run. I'm still sticking to the fact that by December 2022, the prices that you are seeing on your screen will appear like a bad dream. All right. And what are the levels to watch out for? I will watch. If you take the low of the panic low of March 2020, when all asset classes took a wild beating, and plot a high to the recent August of 2020, and if you were to calculate a retracement pattern, a back of the envelope rough calculation tells me that for silver, give or take 700 to $1,000, give or take, the round number of 60,000 seems to be a level to watch. Now, as long as this level holds, I think silver will consolidate and might just go up. Now, before you say what happens if this breaks? If this breaks, Mr. Vijay Bhambwani will record another update by way of a video and provide you hand holding. What happens to gold? Gold, I think 46,000, give or take 500 rupees here and there, is a level that I'm watching for now. Do remember that we've tested lows of April and June, and if we are to fall from there, we might just get another video update out here. But till then, I would think that these are levels that you need to watch out for. And more importantly, I don't think that this is a time to panic and exit out of our long positions in gold. And because of these falls, I keep answering your comments and messages that you send me. Please do not buy bullion on leverage. Leverage meaning futures. Take delivery, whether it is ETF that you prefer in gold or it is delivery in gold, and of course silver, you have no choice, you can only take delivery, since I'm telling you not to take futures. Because the cost of carry or the finance costs are many times over your bank fixed deposit interest rates. As a prudent investor, I don't like paying interest. And if you tell me to pay 2.5 times more than what I receive from a bank FD, that's a strict no-no. So since you've already taken delivery and it's not going to be mark to market, or you don't have to pay any other penalties and charges, I think you need not worry at all. Come 2022 December, we are going to have a party. On that cheerful note, I'll bid goodbye to you, not before reminding you that on Saturdays, we have a live Q&A session on YouTube, wherein I think that Equity Master subscribers should come ahead and join and have their questions answered. I look forward to seeing you for the next couple of weeks, and join me in this Q&A session. And before I bid goodbye to you, I'll also request you to click like on this video if you liked what you saw. Subscribe to my YouTube channel if you haven't already done so. Click on the bell icon to receive instant alerts about fresh videos being put up out here. Good, bad or ugly, let me have your feedback. Keep it all coming. And help me reach out to fellow like-minded investors and traders by referring my video to your family and friends. I wish you have a very, very profitable day. Thank you for your patience. Thank you for watching my video. Till we meet again in my next. This is Vijay Bhambwani signing off for now. Do take care of your trades and investments. Bye-bye.
Want to discover 3 super small cap stocks that could potentially soar sky high in the next few years? Then click here to register for my Super Small Cap Summit right away.